Hello and welcome to PQ Prime. I'm Hiral Dadia. One stock that is in focus in today's session is Mastek. And IT stocks have been in focus as well with what's happening globally. Joining us to decode the numbers, we have Arun Agarwal, CFO at Mastek. Arun, good morning and welcome to the show.
Good morning, Hiral.
Arun, overall, what the trend that we were expecting overall, seeing the biggies in the IT space give out numbers, was that, there will be some bit of pain that will be expected. That does not seem to be that kind of a scenario, at least with Mastek goes. If you could help us understand what is it that has worked for you this time around?
Sure, Hiral. And it goes back to what we have been discussing last 1 year, that we are very focused on our strategy. And a couple of quarters for Mastek organically was not that great, while we continue to acquire, integrate the Salesforce business, which we made the acquisition in the month of August. But we continued to remain invested into our strategic goals. We have seen good incremental order booking in the quarter gone by, and also in quarter execution, which led to increase in the revenue. So again, it's consistent execution of the strategy which is paying it off and got reflected into our quarter-on-quarter growth of 7.7% in INR and 5.3% in constant currency. However, at the same time, we need to be a little bit cautious about the market. When everyone is saying we are seeing delay in decision making, the fact is right. Even we have been saying this last 2 quarters, because there is a delay in decision making. Just to note down, one of the deal which we were contemplating to close in September to October got closed in the last quarter. So there's a continuous pattern which is coming. The deals are not getting cancelled. The CIOs, CXOs are very clear. These are digital deals and very, very critical for their success and for their acquisition of their customers and for delivery to their customers is extremely critical and important. However, because of the ongoing economic headwinds, there is a caution in their minds, and which is making right shifting of the deals at the time, right? But none of them are getting cancelled. So we need to be in the cautionary environment, but we believe those deals are going to stay and those investments are going to come back. It's a matter of time.
Right. So overall, Arun, let's pick it up in terms of regions. Now, in terms of this quarter, we've seen strong deal wins coming in from the UK. Specifically, if you talk about the UK government as well as the UK private, which is retail, as well as the financial services, and there has been stability with regards to NHS and Oracle CX business as well, right? Now, are you expecting that strength to continue, or I'm not saying that, yes, there are cancellations coming in, but probably it's saying that, okay, maybe we don't do it this quarter, we push the spends to the next quarter. Is that the kind of trend that we are witnessing?
Yes, and going back to our SGS secure government business in UK and public sector, which we call out, we have been always saying that the kind of portfolio which we run are very, very critical and important. And last 6 months, there were a lot of concern with whatever was happening in the economy. What will happen to Mastek's number, right? If UK government reduce their spends. And this further reinforces how resilient our engagements are. Rather than any kind of a concern, we are growing quarter by quarter, right? It's on the back of strong execution and the kind of participation which we have on those critical projects. So we feel much more confident on the continuous resilience and growth in the secure government. Now, it's a matter of time whether the growth will be X% or X plus Y, because yes, there is delay in decision making because there are concerns in the economic sides, right? So in a private sector as well, in whether financial services, retail, and healthcare, as we spoke about, including NHS, which we have in the UK, the resilience continues there. And there's an incremental steady growth which we are witnessing in our client base.
Right. So if we are seeing, deals, probably spends getting postponed, if I would say that, if this was a normal year for a Mastek without any of these global uncertainties, what is it that we would expect in the first half versus what is the expectation now?
Here we don't share the guidance, but what I can show that...
Or maybe just a delta, if you can give me that, okay, probably this is the delta that we would work with.
Rather than delta, let me answer a little differently. We see positive momentum in our client base, right? So we believe there will be growth. The matter of growth in terms of percentage, as you asked, X plus Y, is very difficult to call it out because as a nature of business, we run with a lot of book and ship, which we have to sell in the quarter and convert into revenue, right? We feel confident we'll continue to do it. There will be right shifting, but we are poised to grow.
Right. So that's with regards to UK. Now coming to the US as well, we have implemented leadership, changes as well in terms of revival plans there. So what is the strategy going to be with US? How much contribution are we expecting US to make with this strategy shift, specifically from a leadership team perspective?
So it's very, very critical geography for us and for Mastek as overall strategy. Roughly is 25 to 27% currently. Our target is to make it upwards of 35%, right? It will be both through organic and inorganic means, as we have stated earlier. Change of leadership is bringing a lot of focus back into the account mining because we have good sets of accounts. What we have been doing more selling into one or two tower of services with those customers, while we have plethora of other offerings where we have very good track record with other customers, including framework, including case studies, including tools and enablers. We believe the cross-selling of those with the existing customer itself will drive the growth. In addition, we are also focusing on the hunting as well. So we feel with our strategy, we should see, US gradually moving into 35% of overall Mastek portion.
Right. And if you have to divide it between segments, between say healthcare, BFSI, and manufacturing, what is the share right now in terms of revenues? And do we see that mix changing, taking into consideration the pain in the BFSI segment in the UK as well as the US?
So BFSI has not been a large sector for us, and hence we are kind of immune with what has happened in different challenges which we saw in the US market. However, for us, the strong market is healthcare, which we continue to invest, and we believe a lot of growth will come into a particular segment. In US, historically, we have been very strong in retail, but the whole approach is to keep reducing the retail in terms of percentage. It means growing healthcare and manufacturing much more than the retail segment, and gradually getting much more traction into the financial services.
Right. And apart from that, if you see specifically from a headcount perspective, because the next trend that everyone is looking out for from the IT space from a revival perspective is, when is the IT industry actually going to start hiring? Because that's going to give you an indication as to what's the health of the sector. What is that trend looking like along with the attrition?
So again, attrition has smoothened out. It is now 21%. We believe it will go further down into the range of 19 to 20%, where we used to be before all this, mass retirement, mass attrition kind of scenario started, right? However, we will be back to the hiring next year because if you would have seen, we kept on improving our utilization, because what we did differently last year, when we were not growing as well as we wanted it to be, but we did not fire any of our guys. We committed all our, offers which we had given to freshers. Now we are deploying them as we are seeing the growth. You'd have seen the growth has come in this quarter, but the headcount has not gone up. But at the same time, utilization has gone up. So our strategy of continuously investing into the talent and making them billable continues to work in favor of Mastek. We'll continue to do that.
Right. And overall, from a margin perspective as well, we've said that 18% is a comfortable range, but we will aim to a 19 to 20% in the long term as well in the conference call. What are the timelines we are looking at? Do you think it's a possibility in the current financial year, or is it still a longer term from there on?
It's a mid to long term here. Currently, we believe this is a good range to operate at, and any margin improvement we want to invest back into the business to drive growth, because we are working with multiple strategic inputs which we need to implement so that we can drive the growth for next 3 years. So the whole endeavor is to operate in the similar range, and as strategic activities start giving the results in the coming years, we'll come back to 19-20%.
Right. And Arun, one more thing I want to understand from you from a customer perspective, from deals and decisions, is there any challenge from a payment cycle perspective? Has the credit cycle become longer from that end?
We have seen some delays, and that's the reason our DSOs has gone up to 93 days. And we used to operate at the comfortable range of 80 to 85. Right?
Wow.
So there is a change which we have seen, but it's a combination of both. There's a lot of expectation which is increasing, whereby client wants services to be done onshore, near to them, right? And while the models are much more a combination of onshore and offshore, we believe a lot of this will smoothen out down the road, and we'll come back to 80-85 kind of a DSO cycle. In terms of payment concerns, I don't see any payment concerns as such.
Right. And very lastly, from a company perspective, from a service provider perspective, what are the key monitorables you as a company will be watching out for from a customer specific, viewpoint? Basically, the day, the monthly, quarterly touch points that you will have with them to ascertain what's the situation. What would that, lookout be?
Really, it's much more regular. We can't afford to be monthly and quarterly touch points. Our salespeople are walking the corridor almost every day. So we work with for the customer, and you are the prime for me. That's how we operate, and that's the nimble and humble approach which we have taken has been the successful reason of Mastek growth. We continue to do that.
Absolutely, and that's showing in the numbers as well so far. Thank you, Arun, so much for joining us on the show, and thank you for the candid conversation as well. Stay safe and speak to you soon again.
Thank you, Viral. Take care. Have a nice day.
Take care.